The Bank of England prepares for negative interest rates. Let's have a look. Hello everyone, Florian.heise here, and welcome to another episode of HeiseSays. Grab your stein of coffee and let's have a look at this article from CNBC discussing the Bank of England preparing or asking banks about their readiness for negative interest rates. Now, if you're not aware, at this very moment, the cash rate over in the Bank of England is 0.1%. Essentially negative right now for all intensive purposes, or zero for all intensive purposes. So can they push it even lower? What does that tell you? Desperation about the economy. I mean, negative interest rates are not natural by any measure. They don't make any sense. You wouldn't lend money to someone and then expect to have to pay them. Would you, if you would lend $50 to a friend, or say, $1,000 to a friend, and they bought some, Afterpay shares and made a huge profit on it. They bought them at $1, and then they made $80,000, but you still have to pay them negative interest on that money. They got all the opportunity cost, or all the benefit from holding that money, from using it. They could invest it how they want. They got all the opportunity cost. For you, the opportunity cost was losing that potential money you could have invested or used that money in something else, and you have to pay for the privilege. So the fact that the central banks around the world, more and more of them, are looking at negative rates, we can see here the countries that have it: Switzerland, Denmark, Sweden, and Japan. Since 2016 in Japan, guys. Switzerland, 2015. We can see there are some fundamental issues with this. It does not make sense. But, more and more are looking at it. More and more preparing for it. So the Bank of England asked banks on Monday how ready they are for zero or negative rates, following up its announcement last month that it was considering how to take rates below zero if necessary. I mean, you've got to also understand, this is going to be a logistical issue. So all the programmers out there can, chime in. Are the programs going to be able, in these financial institutions, are they going to actually be able to handle negative rates? If they're old software, they may not have even thought that negative rates could be a possibility and programmed it into, had that capacity built into them. I mean, it's a clown world we're in now, guys. It really is. It's just crazy. I mean, there's this smack of confidence. It's going to be like a slap in the face with a fish to the consumers over there. It's going to reek of desperation. Other central banks have pushed rates into negative territory in an attempt to spur bank lending more. And the Bank of England said in September it was looking into what such a policy might mean in Britain. As part of this work, we're requesting specific information about your firm's current readiness to deal with a zero bank rate or negative bank rate, or a tiered system of reverse remuneration, and the steps that you would need to take to prepare for the implementation of these, Deputy Bank of England Governor Sam Wood said in a letter to banks. I'm going to have a shot of coffee with that. There you go. So guys, quick, hurry, borrow to the max. You can get negative interest rates. I mean, it can't last forever, can it? Can it? How long can it go? How long can they kick this can down the road? I mean, if money is better than getting money, if it's better than free, you get paid to take it. What are people going to do? They're going to take it and then throw it into real assets. And what happens? What happens? What assets are they going to throw it into? Precious metals, perhaps? Will it go into crypto? Will it go into property? Here in Australia, I bet you would flood property if they went into negative. It's our thing, guys. Even with the market the way it is. The Bank of England and lenders had to understand the implications of any such move, since the MPC may see fit to choose various options based on the situation at the time, he said, referring to the central bank's Monetary Policy Committee. Woods said he wanted to know if there were any technological challenges to implementing zero or negative rates. I mean, it's just crazy. This is like the second article in days where we're discussing this. More and more places are looking at it. It's just clown world, guys. Clown world. There'll probably be a time in the future where we tell our grandkids, back when we were young, when you put money in the bank, you got paid to have your money sitting there, and they didn't pay you to borrow money, and they'll look shocked. They'll look shocked. And when we were really young, you only got 20 hours of internet a month. Well, actually, you can say that to your kids now, and they look at you shocked. So, we're also seeking to understand whether there may be potential for short-term solutions or workarounds, as well as permanent system changes, he said. The Bank of England set a deadline for November 12, a week after its next monetary policy announcement, for banks to respond. Monday markets last week pushed back bets that the Bank of England would cut rates below zero. Investors see rates falling below zero in May 2021 instead of March. Bank of England cut its benchmark rate to a record low of 0.1 in March to help the economy through the coronavirus crisis. Its next move is widely expected to be an increase in its £745 billion bond buying program in November. Sterling and British government bonds were little changed in early trading on Monday. Governor Andrew Bailey has said the Bank of England's assessment of negative rates was not a sign that it would cut rates below zero, and Woods echoed those comments in his letter. Well, of course not. Of course. We trust them. They're all going to be, definitely not cutting rates to zero. No, not at all. No. What do you think? I think it's inevitable in some of these places. I think they're going to just get desperate. It's going to tank confidence, and they'll blow up the bond market. It's just the way it is, guys. The risk of this is that it will lead to inflation and to hyperinflation. So then there will be a flood of people going into real assets, and a lot of people are predicting. Well, I don't know. I assume a lot of people, but it's probably just the YouTubers I view are saying going into precious metals. Some are going into cryptos. The volatility in cryptos, though, for me it's a bit much. But then it comes to your risk-reward ratio of what you want to do. I mean, if you get hyperinflation, would you rather have a pile of cash, or would you rather have a property? Is that why we're seeing people jump into housing here in Australia? Why more people are going regional, getting out of the cities, preparing? It's why the mega rich are buying private islands around the world. Banks earn money from interest and negative rates would hit profitability. But Wood's letter made no specific mention of this, focusing instead on the technical preparedness of lenders. Do banks really make money from interest, or do they make their money from investment and speculation? Oh, it doesn't matter. The Reserve Banks should just print more money and throw it at them. Give it to them. Pay them. It's all play money anyway. An accompanying questionnaire asked banks how their retail and wholesale businesses' IT system could cope, and how much time and money it would cost to make short-term tactical and permanent strategic changes. Banks are already under pressure to help households and businesses struggling with the pandemic. They also could face a reduction in access to markets in the European Union when Britain's post-Brexit transition period expires. So there we have it, everyone. There we have it. The Bank of England contemplating negative rates. Another bank. Wouldn't it be convenient if the banks had like some digital currency that they could issue that just had it all pre-programmed in? It's a scary future, the prospects of all of this. So the key points are: other central banks have pushed rates into negative territory in an attempt to spur banks to lend more, and the Bank of England said in September it was looking into such a policy and what it would mean for Britain. Now, our own governor here in Australia, Philip Lowe, has shared information that when rates go negative, in some ways people save more. It doesn't have the effect that's anticipated. People save more. You can understand. I guess it's to do with confidence. They're worried, I'm going to lose money from my savings, so I got to put more in to take account of that loss. It's crazy. It really is. The fact that we're even getting to this point just shows there's some fundamental issues with this manipulations of the economic system. And remember, guys, economics isn't a science, it's an art. They like to pretend it's a science. They like to pretend it's a hard science. It's not. It's more social science. Anyway, let me know what you think, guys. Do you think we'll see negative rates in England? Do you think, what will that say for the other countries? We were just looking at Canada was open to the prospects. Here, Australia, they're not, not considered, but they won't take anything off the table. Remember when, a cash rate of 0.25 would have been considered crazy. Not now in 2020 clown world, guys. Anyway, thanks for watching. Please like, share, and subscribe to the channel. If you're a fan and want to support the content I create, there are a few ways you can. You can join the channel on YouTube or Patreon. You can support us using our affiliate links at Amazon, eBay, Independent Reserve, or Kucoin. You can buy merch from HeiseSays, use Gold Pass from the Perth Mint, or support us via PayPal. Take care, guys. Have a great day. I'll see you next time.